After 3 super busy weeks of new companies coming to market, this week we tapped the brakes some as we enter October a little slower, at least as of this recording late Sunday evening. But I'm not complaining, because there's a good chance that we'll be picking back up soon. Real soon. In fact, later this week, so I'll break this week's episode into 2 parts. And for today, because I get a lot of questions on Hyliion, we'll talk a little bit about its trading debut. Welcome to IPO This Week, Part 1 for the week of October 5th, 2020. Hey everyone, I want to thank all of you in the community for coming back. It's our first video since the live stream that we did following Palantir's first day of trading, and I have to say that I really enjoyed that real-time discussion. And while I know I didn't get to everyone's questions and the comments in the chat, I did read them afterwards and just really appreciated everyone jumping on and interacting with me and with each other. That was just so cool. I noticed a lot of familiar names and a lot of new names that were able to join me live, so thank you, because I know that was on short notice. And we also had a lot of you watch the replay and share some additional comments, so we'll definitely do more live streams in the future. And hopefully I'll get better with them. One company that I noticed being asked about a couple of times when reviewing the chat that I didn't get to was Hyliion. So with us breaking this week's episode into 2 parts, I'll take some time to share some thoughts about its first day of trading. And just to be clear, this isn't going to be an in-depth look at the company that I often do. Instead, it's just some thoughts that I had about how it traded the first day after the merger and how it relates to data for investing in SPACs in general. Oh, and I guess for anyone new here, I should introduce myself. My name is Kevin, and I want to welcome you to the Healthy, Wealthy, and Wise channel in our weekly feature, IPO This Week, where we talk about all the companies going public and also cover lockup expiration dates, as well as any notable quiet periods ending. On top of that, we do some more thorough analysis videos on specific IPOs which generally have a lot of interest, so if these are the things you're interested in, definitely subscribe to the channel. After all, it's free, and we'd love to have you join us. And as always, please know upfront that I'm not a financial advisor, and while my videos are meant to be informative, they should not be seen as a recommendation for you to take any action on the companies covered. You should always do your own research or consult with your own financial advisor when making any investment decision. Alright, let's get into the new companies that have IPO dates on first. We'll start with Aziyo Biologics, ticker AZYO. The company is a commercial stage regenerative medicine company focused on creating the next generation of differentiated products and improving outcomes in patients undergoing surgery, concentrating on patients receiving implantable medical devices. To that point, Aziyo was founded in 2015 to develop a portfolio of products that assist the body in regenerating faster from cardiovascular and orthopedic operations, which include surgical site soft tissue reconstruction. Within their portfolio, they have core products, which I've pulled a chart from their filing that you can look at on the screen. Financially, net sales grew $3.9 billion, or 9.9%, to $42.9 million in the year ended December 31st, 2019, compared to $39 million in the year ended December 31st, 2018. The increase in net sales was due to the significant growth of their core products, which grew $8.2 million, although partially offset by a decrease of $4.3 million in net sales of the non-core products. That decrease was primarily due to the reduction in volumes from one significant contract customer after the customer engaged a second tissue supplier per the filing. Gross margins improved from 41% in 2018 to 46% in the year ended 2019. Yet overall, the company is reporting widening operating losses in the same time period. The company plans to raise $50 million at a $177 million market cap, with the IPO set to occur on Wednesday, with pricing expected in the $16 to $18 range. Trading should then begin on Thursday. And next up, we have a company that streaming sports lovers may know, and that is FuboTV, ticker symbol FUBO, which actually sounds like a statement on body odor. I know, boo. Can't help myself sometimes. Anyways, the company's live TV streaming platform launched in 2015, offering subscribers access to live sporting events, as well as leading news and entertainment content through streaming devices, smart TVs, smartphones, tablets, and computers. The company currently offers subscribers a live TV and streaming service priced at $59.99 per month, with the option to purchase add-ons and features best suited to their preferences. The base plan includes a broad mix of over 100 channels, also including access to over 700 local TV channels covering 99% of U.S. households. FuboTV reported having over 286,000 paid subscribers on June 30th, 2020, which represented a 47% increase from June 30th, 2019. However, with that growth, the company has yet to turn a profit. Revenue has almost doubled from 2018 to 2019, however, operating expenses are higher and have increased over 50% in the same time period. According to a 2020 market research report by Absolute Markets Insights, the global market for sports streaming was an estimated $11.3 billion in 2018 and is forecasted to reach $38 billion in value by 2027, representing a forecasted compound annual growth rate of 14.56%. Reasons cited for the expected growth include a younger demographic preferring streaming services rather than traditional cable TV, and the increased speed and capacity of mobile networks. Within that market, FuboTV competes with the likes of AT&T, YouTube TV, Hulu Live, and Sling TV. So definitely some bigger companies they have to deal with. The company plans to raise $150 million at a $1.4 billion market cap, with its IPO set for Wednesday, October 7th, with pricing expected to come within a range of $9 to $11. Trading should then begin on Thursday the 8th. So let's stop with the new IPOs here for now. Companies that we'll look at later in the week could include Intrusion, Kronos Bio, iHuman, Static Labs, and Spruce Biosciences. So look for coverage on those companies in part 2 of this week's episode a little later in the week. Before we get to Hyliion, let's take a quick look at this week's list of companies with locked up shares expiring. And it's a short one. We only have Keros Therapeutics, ticker KROS, a biotech that focuses on treatments for patients suffering from musculoskeletal and blood-related disorders. If you're wondering why we cover lockup expirations, and I know I get a lot of questions on them, please see my video on understanding the IPO process that I'll link in the description for you. It helps explain why knowing this date can help you better trade the stock, so definitely check it out if you haven't seen it before. Alright, on to Hyliion. I was asked about it on the live stream, and because I've never talked about it on a video and we have some extra time on this episode, I thought it made sense to spend a little time on it today, especially since it just made its trading debut as a merged company on Friday. And if you're wondering why I had never talked about it before today, well, that's because the SPAC behind the merger, Tortoise Acquisition, announced its merger with Hyliion on June 19th, almost a month before I started focusing on IPOs on the channel. Obviously, its debut had a rough day. The stock was down 12% on a day that the overall market was down on news of the president, but not that big, with the broader S&P 500 closing down just under 1%. So the question is why? I'm going to preface this at this point to make sure everyone knows that when I talk about a stock, it's not because I'm a fanboy or a hater of the company. I just try to share what I feel is the most important information on it and share my own personal thoughts. And I say that right now because I know how much hype there has been for Tortoise and Hyliion. And that hype is going to be a factor when you consider how the stock traded, because as you know, there's been a lot of hype and speculation with this merger. But that's been a common theme for all SPACs looking to target the EV market, so that's nothing new. So here's my take on day one. If you like the company long term, nothing changed. Not one thing, at least that I'm aware of. So if you did your research and liked the company, just remember it was one day. Right now and over the next couple of weeks, the market will start to figure out what the share price in the company will be valued, which is true of any company that just starts to trade. The company still already has a product on the market that's bringing in some revenue. They still plan to begin shipping an electric drivetrain next year. So again, nothing has changed. What I believe you saw on Friday was just the risk in investing in a company that goes public through a merger with a SPAC that had a whole lot of investor interest in it. And it's why I've yet to personally invest in a SPAC myself, which I've shared with you in other videos. One of the biggest reasons for me is that I can't see the more detailed information that a company has to report when it goes public through the process of a traditional IPO, the kind of information I've shared with you on Snowflake and on Rocket Companies. It's been a struggle that I've personally had in trying to cover SPACs because I know how much interest many of you have in them, and I want to give you information that is really helpful to you, not just being another person out there on YouTube just pushing the hype. I'm going to share some interesting data on SPACs in a second, so hang in there. No doubt there's a lot of hype and fanfare when it comes to traditional IPOs as well, but you do have more information that is publicly available as compared to a SPAC, who you put your trust into to identify the target company. With a traditional IPO, there's still a lot of risk, but at least with the additional data, you can start to formulate what you believe the company's stock price might be worth. It's just harder for me to look at a SPAC and come to a similar determination. Maybe I'll learn more on how to do that, but for now, that's where I'm at. I did put together a video on how I look at tiers of risk when investing in newly available companies that you might find helpful. I'll link it for you in the description. I also want to share some data from Renaissance Capital that was posted on NASDAQ.com that I think is pertinent when looking at Hyliion post-merger. In their look at the data, what they've seen is that SPACs with pending mergers have performed better than SPACs post-merger. Of the 313 SPAC IPOs since 2015, 93 have completed mergers and taken a company public. And of those 93, The common shares have delivered an average loss of negative 9.6% and a median return of negative 29.1%, compared to the average aftermarket return of 37.2% for traditional IPOs in the same time frame. They also reported that only 29 of the SPACs in the group that had positive returns as of last Wednesday's closed. So I guess what I'm saying is that I can't find one specific reason to Hyliion as to why they had a lackluster debut, which if you bought into the company should be seen as a positive. But because of that, I have to wonder if it's related to the process to the way it went public and the innate level of risk built within it in attempts to properly value it. And when we consider the data that I just shared with you on SPACs in general, it's possible that Hyliion is just following the typical post-merger path. But again, if you like the company long term, there's no reason not to like it any less than you did before Friday. And if you were looking for the quick pop on day one, it's frustrating, but at least it didn't completely tank and you have a learning experience for the next time. But I always want the best for my viewers, so I'm hoping that it bounces back and by this coming Friday, you're feeling better about your position. So let's end part 1 of this week's episode here for now, and we'll continue with part 2 later this week. As always, please like the video if you enjoyed it and share with your friends and also on any of your social media sites and forums you're on. It's your way of helping me to grow the channel so that I can keep on doing this. And if you're new here or just an occasional visitor, we'd love to have you join the community. You just got to press that red subscribe button. And with that, I wish you a good week of trading. Thank you for watching, and until next time, have a great day.